As scientists work to understand more about the Omicron variant, economists are keeping a close eye on potential impacts to the economy and to the housing market. Rising concerns in recent days sent mortgage rates on a roller coaster. We are joined by our real estate expert now, Lane Lyon. He is a Denver realtor and managing broker with Coldwell Banker. Lane, good morning.
Gary, good morning to you. Thanks for having me on.
Sure, you bet. So when rates were expected to start going up, they actually went down. So talk a little bit about that.
Well, instead of the Twister 2 roller coaster at Elitch Gardens, this one was called the 10-year Treasury yield. What does that mean to consumers? Well, it means that when concern really grew on Friday with Omicron, travel restrictions went into place, concerns went up. We saw investors moving to the bond market. And when that happens, mortgage rates go down. It's exactly what we saw Friday into Monday. Mortgage rates for 30-year loans were under 3% again. We saw things kind of come back a little bit yesterday, but really it's an indication that as long as there's uncertainty about this COVID variant, mortgage rates are going to stay low, at least for the short term. That's going to be continued opportunities, I should say, for home buyers looking to get out there in the home market, keeping demand up, and homeowners, Gary, who might be looking to refinance. This might be a time to think about that.
Yeah, absolutely. So it sounds like housing prices, though, are not caught up in this. They're continuing to go up, right?
Absolutely. Up, up, up. 2021 might be the year that we all remember was the time that our home values had record appreciation, right? We all remember that. We weren't alone, actually, this year here in Colorado. In fact, Case-Shiller came out with a report yesterday. Here's a look at some of those numbers. Case-Shiller, by the way, tracks home values across the U.S. It shows the cities with the highest price increases. And take a look at this. In September, Phoenix, Arizona, prices were up 33.1% over last year. Incredible. Tampa up as well, 27.7%. Miami, 25.2% year over year. Denver, 21.2% year over year appreciation growth. That's 4 times over the national average, historic average, Gary. Cities with the lowest price growth, by the way, were Chicago, Washington, D.C., and Minneapolis, still great cities, and their appreciation was still right around 10%. So it shows that real estate has proven to be a great investment across the country, even this year.
Those are some crazy numbers, that's for sure. Yeah. So get out your crystal ball now. What about going into next year? Do you think these trends will continue?
Well, there's a little bit of cautious optimism because we know we can't sustain these types of numbers, right? And I have to tell you, there's no real consensus among economists about what really might happen next year with the housing market. Things are looking very encouraging, though. Variables that are really at the forefront of the conversation continue to be COVID. We've got to make sure that we get through this health crisis. Also, millennials continuing to flood the market, keeping demand up because they're old enough to buy houses now. So we'll be watching that. Inflation creeping up. That could play a role next year as well. And employers, will they continue to let us work from home next year? If that's the case, that could also be good for the housing market. And I have to tell you, Gary, before I go here, that anyone who's forecasting the housing market to slow a little bit is really pointing to the prospect that interest rates at some point are going to go back up. And as we've seen over the last few days, at least in the short term, that's not happening. So I think here locally, we're going to get 2022 started very busy with some great opportunities, much like we saw this year.
All right. Good stuff. As always, Lane Lyon, thank you very much. Appreciate it.
You too. Have a great day.
Okay, you too.